All right, we've got a pretty important number tomorrow. We've got CPI and core CPI. The Fed obviously cares more about the core than the headline number. And for the first time, and as long as I can remember, the core is actually going to come in above the headline number. So I don't know how people are going to deal with that psychologically, because when you hear people say, oh, inflation is dropping like a rock, the Fed needs to back off, they always point to the CPI, the headline number. But the Fed has continuously said they want to focus on core inflation. Core inflation is where inflation is most sticky. And we don't know what's going to happen with CPI, because the biggest contributor to the decline in CPI has been falling gas prices and energy prices. And those are slowly starting to reverse. So maybe in the second half of the year, that might cause some problems. And we want inflation to not reaccelerate up. At least that's what the Fed wants. So the market is looking quite interesting here. I obviously don't know how inflation is going to come in tomorrow. If anything, I'm leaning more towards it's going to come in cooler. Inflation might come down. However, despite that, I'm still not optimistic about the market. And I'm not really caring too much what the market's reaction to CPI is, because one, the bull case has won this year, unequivocally has definitely won. And it has continued to get, more and more bullish and incorporate more and more potential outcomes towards the bullish extreme. So I think a lot has to be priced in. But towards the end of the day, we get not only additional Fed speak, but we get the Fed minutes. And if you heard Goolsbee today, he is, as I discussed yesterday, is the most dovish member of the Fed. He's also the newest member of the Fed. And he essentially sets the dovish floor. And the dovish floor today was inflation's extremely hot. The banking stresses might impact rates 25 to 75 basis points, an equivalent impact. But the key word there was may, because earlier this morning, John Williams of the New York Fed said he's not seeing that. Bullard said he's not seeing that. I believe all the rest of the consensus was he's not seeing that, or they're not seeing that. So the way I'm interpreting this is Goolsbee is the dovish voice. The market is acting and discussing as if all the Fed members are Goolsbee. Let's not forget, just last week, they were pricing in only a 40% chance of a hike in May. So I think it's a hawkish stance thing to see one member of the Fed be dovish and the rest be much more hawkish. And Williams spoke last night and this morning, back to back. So I think that says something. Later today, we're hearing from Kashkari. Kashkari is a former dove. He, when we were simulating, said he wanted maximum stimulus. And now he's arguably one of the more hawkish members of the Fed. So he has had a mindset shift. And, he's already spoken multiple times since the banking crisis, since the FOMC. So I expect it to be more of the same. So CPI, regardless of if it comes in, I think the risks and the possibilities and the outcome at this point, it wasn't the case earlier in the year when I was bearish. But at this point, they are very much skewed to the downside. The market possibilities. A lot, everything would have to go perfect for Apple to keep pushing up to an all-time high when its earnings are not warranting that picture. You see what I'm saying here? It's like they're declining in earnings. They're declining in revenue across every category, basically, as far as I'm aware. So not the best when you're priced to experience 20% earnings growth every year, and that's no longer happening, because that was the case, and that's why these multiples are way above pre-pandemic multiples, but we're getting back into a more normal post-pandemic world. So things are changing, and like I said, a lot has to go right for stocks to keep going up from here. I think yields need to go up, and we'll see what happens. Tomorrow we got a lot of stuff. And then later in the week, we get bank earnings. That should be pretty interesting. But it's a big week. There's only so much we can do. Obviously, we like to see things like Microsoft trading below yesterday's low today. We like to see it closing near the lows of the day. We like to see NVIDIA breaking down a little bit, possibly forming a very beautiful head and shoulders top. If that ends up holding, that will be very beautiful, but hindsight is 20/20 and we don't have perfect vision right now. So that's today's video. We'll see what happens. And until next time, peace out.